Mr. Mark Selby, how are we, sir?
Excellent, sir.
Where are you?
I am in Nashville, Tennessee for the first time. I wish it was to go to concerts and hang out here for a weekend, but I am here at a North American Stainless Steel Conference, which is the leading conference. I'm on a nickel panel on Friday, and as Crawford will not only be producing zero carbon nickel for the nickel and cobalt for the battery industry, we'll be producing zero carbon iron and chrome, which is ideally positioned for the stainless steel industry. So we'll be meeting with a bunch of groups down here while we're here.
Okay, well, that's really cool. I'm sorry you aren't getting to see Dolly while you're there, but work is more important this time. Look, today we're going to obviously get a catch up on the market, see what's happening. We're going to talk about a few companies. We've got Era Copper, Palladium One, Azure Minerals, Manitou Gold, and more importantly than all of the above, I wouldn't mind getting your take on a report that's put up by Lobo Tigre on nickel. It says, why I'm not a nickel bull. I mean, he makes some really good points in there, but I just want to give you a chance to respond to some of those things if you've had time to peruse that. Okay, so that's what we're doing today. Look, come on, let's make it snappy because you've got a country and Western stainless steel conference to get to. What's happening in the markets?
Yeah, so basically we talked about a month ago, and now we'll be talking more regularly as there's more news flow coming from the exploration side of the business. So yeah, basically when we last talked, nickel prices popped up over $24,000 a ton, $11 for the non-metric people. But then we're right back into a range either side of $22,000. We've been largely in that range for most of the summer. We've had inventories also sort of bounce around 52,000 tons on the LME. And so again, given all the noise we've seen on the economy, the fact that has not yet ticked up yet is, I think, is a good sign and is helping to provide some support to the market. Again, as I said before, and we'll see if I finally get it. I have been calling for a dip below $20,000 a ton at some point, and again, October, early November can be tough months for the market. So I still think we may see some of that if we get some unexpected economic news. But again, as I've also said, I expect to see some pretty decent strength into year end as the battery markets come back. So continue to drive forward, and we've already seen some of that. I was pleasantly surprised with the news out of China. Heading into one of the week-long holidays. Again, those week-long holidays are a pretty good test of where the market is because they're off for such a long period of time. Businesses tend to try and position themselves to come out of that week in the position they want to be. So if they're really nervous about end user demand, you'll see them destock heavily and prices gap down before that week. If they think they're going to come out, the other side of this week, with relatively good demand, you'll see them pick up a little extra stock so that they're all ready to go when business opens a week later. And so the last week was one of those weeks where they seemed positive about the market. We saw discounts for both nickel pig iron and matte and mixed hydroxide feeds for the battery market compress. So we've seen some pickup in stainless, and again, the battery market, which I've been expecting, is showing those signs of strength that we are expecting. The key thing, and as I said at the very beginning of the year, we have to soak up a huge amount of nickel pig iron capacity coming from Indonesia. So, until those discounts become tighter, which will indicate that the market's really cleared that overhang, that to me will continue to be a cap on the nickel price. But, again, expect to see that, start to materially close up by the beginning of the end of this year, beginning of next, and should hopefully be in a decent position by middle next year as we see continued, strong demand from the EV sector.
Well, that's where I want to go actually, because we're hopefully in a second going to talk about the stainless steel market, because you're there to do a job that is 70% of the market as it stands at the moment. But on the EV side, I mean, we're also starting to see quite a few deals coming out of Australia, with Australian companies. So what can you tell us what's happening down there?
Yeah, so it was good to see a couple more deals done. So GME, who's got a laterite project in Australia, signed what sort of I'll refer to as kind of the first generation offtake deals, where you've got some sort of MOU. It's for a whack of your offtake, but there doesn't seem to be any specific financial consideration to help fund your project directly. So, that's what we've seen a lot of those in the last couple months in the lithium side of the business. But where I expect the market to go in, and again, based on conversations that we're having, with people in the marketplace, is they are prepared. They realize that because the market hasn't stepped up to provide the capital that mining companies need to develop new capacity, that they are going to have to provide some of that capital to help make that happen. So GM signed a deal with Queensland Pacific Metals for whatever offtake they hadn't already committed to earlier deals they'd done with LG Chem and POSCO. But they're basically committing $100 million Australian to invest into the business as equity. So they're putting in about $26 million up front, and then a commitment, as they raise subsequent amounts of capital, they'll provide that capital, up as long as they don't go over 10%. So, very, very good to see that deal happen. And again, I think over the next 12 to 24 months, you'll see more of those deals emerge.
So I've got to talk about this, which is a bit more kind of business side of things. You talk about first generation, second generation, the different types of deal structures there. And we've had companies come on with wonderful headlines. We basically we have an agreement with Polestar, one of the EV manufacturers, and then you dig down and you go, agreement to do what? Oh no, we just agree that it's a very good space, and we need to. I think what was it? Something to do with standards. There's something to do with our standards, their standards, everyone's standards need to be good. It's not something that you need. There's no financial commitment there, and so the question I'm asking is there's a non-binding MOUs, binding MOUs, financial commitments, equity stakes. Deals done at company level, deals done at asset level. It could get very confusing for the uninitiated investor looking into this space, because I suspect there'll be a lot of white noise coming out in terms of deal structures for you. I mean, this may be relative to you at some point. When you look at these deals, what are you looking for? What's real and what's not?
Yeah, it's, again, the two key elements, non-binding versus binding. Again, non-binding is nice, but there is no hard commitment that's there from either side. And then the second part is some sort of financial commitment. So again, just as you outlined there, it doesn't matter if it comes in as equity at the corporate level or buy into the project at a project level space, or upfront cash from as sort of a prepay against option against future offtake. But there needs to be a chunk of cash that's there. That sort of is confident. The companies will write a check if they think that the product is going to get there. And so that's the key difference, and that's the thing I would look for as an investor. I think people are getting that already because we've had so many deals announced in the lithium space, and that you don't see the same kind of reaction to a non-binding MOU today that you did, say, a year ago, with a particular transaction. So as I said, I think we'll see more of those deals in the nickel space. And lithium space over the next piece, because again, the car companies got smacked pretty hard when there's quote no shortage of lithium. There's lots of lithium projects all around the world. Oops, nobody built enough of them in time, and oops, we're paying 10 times the price for lithium that we were paying 3 years ago. That wasn't such a good thing. So I think that's underpinned that if we want the product that we want at the time, in the time frame we want to get it, we need to actually open our checkbooks and make some stuff happen.
Well, it's interesting, actually, in the last 2 years, and we've talked about it before. Basically, OEMs, battery manufacturers, sort of moving upstream is something which prior to COVID just wasn't happening. So why would you take the risk? You can go buy product in the open market from metal traders. It's not something we want to do. But are things I mean, I know it's only early stages now, but you've been to a few conferences of late. Is there nervousness? Are things tightening up in industry? Because I always look to industry to kind of guide me as to where this is going. Obviously, OEMs investing hundreds of billions of dollars suggest that that's a big momentum, a big push into that space. So investing in battery metals makes a lot of sense. But what in a slightly more nuanced way, what are the sorts of conversations that are happening at these conferences? Is it a case of, hey, look at me, I'm here? Or is it, well, actually, here's something you need to understand in terms of the time frames, or here's what you need to understand in terms of the technical challenges ahead, or what are the kind of the big conversations?
Yeah, no, I mean, with conferences, because again, you can have, the one good benefit of the pandemic was people are much more comfortable doing stuff by Zoom. So I don't have to fly half around the world for a 2-hour meeting. It helps really underscore it's an opportunity to connect and advance discussions in person, which is always constructive. But then in terms of the tone, in terms of the raw materials on the battery side, I think if you look at a lot of, whether it's Battery Metals Review, Benchmark, the others, they're kind of really sounding the alarm bell. I think Benchmark did a great report, again, trying to break it down to very concrete terms for people, that if you take the average mine size, how many dozens of mines need to get built to provide, the raw materials, even for kind of the low end of their projected forecasts. So, that makes it very concrete. And again, I've been talking to car companies and battery supply chain people for 5 years, before my past life with RNC, and now, and the conversation has very, very, very much shifted to, we just want offtake to, okay, providing capital helps you unlock more capital. Us coming into place, particularly in Canada, where the government's been handing out checks to people building battery plants. It gives us a lot more leverage with the government to get them to move more quickly, which, for us right now is the key value bottleneck for Crawford. And again, they are fully cognizant of the value that they can bring by getting involved in a mining project, at a much earlier stage. And again, that's the point I would, both these projects are not feasibility study stage projects yet. So it's good to see them sort of going, up the development supply chain as well. So. Okay.
And just in terms of because it's getting tight out there, lots of conversations happening all the time. So, there are conversations and there are conversations. The standards for investors don't need to be too high, because it just means, right, I like that thematic. I'm going to invest in any company in that thematic. It'll all boats float in high tide, apparently. In industry, what do they need to see? Because, we're going to talk about the Lowbro T-Grey report shortly. But what are the hurdles you need to overcome? What are the questions that you're being asked about, say, your projects, or even more broadly, what specifically are these guys who are now moving upstream into area this have not done before? What makes them comfortable?
Well, I think, one, in terms of the ESG and community support, right? They don't want to be attached to, quote, a bad mining project in terms of the reputational risk more broadly. So, I think Queensland Pacific did a very good job sort of highlighting sort of the whole green credentials, community support, and so forth. So that allows the big guys to tick the box on that front. I think number two is the scale of what you're doing. Again, if you're like most things in business, if you do a deal at 1x and another deal at 10x, it's about the same amount of work to get the deal done, but you're getting 10x more lift for the bigger deal. So I think they, are very, like to see higher volumes of material come out and the potential for, future expansions that's there. So I'd say that's sort of box number two that they're looking for. And number three, again, we've talked on other shows in terms of how the battery value chain and supply chain is rapidly evolving in terms of how the feeds are going to go, into those markets. They just want to understand, okay, the product that you're producing, these are the the precursor makers. This is how we get it today. How do we marry those two together? And is there a sensible path forward on that? And those are really the boxes, from what I've seen are the key things they're looking for.
Right, but do they see some quick wins? Do they see some easier paths to getting the metal that they need, or are they in this for the long term? Because like the market, we've talked in the past about the metal traders. We've talked about the fiasco of LME. We talked the fact that mining is not really for these guys. They're downstream industry only. But now they're saying they've got their own problems to sort. Are they just stepping into the breach temporarily, or is this going to be a permanent and possibly something which everyone needs to start doing, because the market dynamics will change?
No, I think in terms of the easy wins, those were stuff they did in 2020, 2021, where they went to Glencore and Vale, who are already producing today, and say we'd like a 5-year contract for X amount of nickel. So they basically, it's a very short list of existing producers in North America, who produce material, and they went and basically locked up as much of those guys as possible during that 2020-21 timeframe. In terms of a permanent feature of the market, I think it'll come down to be honest, not sure at this point. I would say, I think they would, again, ideally love to see the capital markets fund all the supply they need without having to deploy any of their own balance sheet to make that happen. So if getting a few deals done helps catalyze the market and seeing a bunch more deals done, I think you may see them pull back a little bit on that front. But that being said, I think there is a bit of a land grab, particularly for producers in the United States who have to meet certain content requirements. So again, not surprising, a month after the Inflation Reduction Act announced by Joe Biden, that deals are done on earlier stage projects in Australia, because those are that's one of the countries that qualifies as a free trade agreement partner with the United States, to supply those materials. So I think there's, again, I'm not sure, but there's probably a pretty good chance that you'll see some sustained activity in that space, just to make sure, that they've got their hands on as much of the supply as possible. And again, the fact that these deals were done with Stellantis and GM, who are the car makers, not the battery supply chain people. So, the end car makers, are signaling that we want to control, the volume of supply that's coming through to our vehicles ultimately.
Okay. Interesting. I'm always fascinated by that side of the business. We better talk a little bit of company stuff. Should we start with Vale? What
sure. Yeah. So there has been some rumors floating around, and some more substantiated rumors that they're going to sell a minority stake in their base metals business. Again, the multiple that the company's trading at right now, their base metal assets are basically being valued at a massive discount relative to their iron ore business. So the rumors is that they'll sell a portion of that business for a couple $2 billion to some sovereign wealth funds, but basically keep it private for now. And consider at some point whether it makes sense to spin the business out. Obviously, today's market is not the best place to be able to do that. But that capital should allow them to recognize and raise capital to fund the base metal business at a valuation that's closer, that reflects the underlying value of the base metal business.
That's interesting. It's interesting. I'm always fascinated by in moments like this, even the big guys. We talked about Rio Tinto earlier this week, offloading one of their uranium assets. You don't sort of expect these big guys to have to sort out the balance sheet by offloading these sorts of projects, but I guess non-core is non-core.
Yeah.
Right. Let us talk about was it Eric? Oh, crikey!
Yeah.
Who are we going to talk about next? Copper. Was it Aero Copper? Yeah. Let's talk about them.
Yeah. So again, you don't often see copper companies talking about nickel discoveries, but I think in our 2 or 3 years of doing the show, this is one of the better opportunities that we've seen. It's tough to get a lot of lift out of it because they're already, a very well-positioned copper producer today. But it looks like they've got two decent zones and a whole series of structures. They kept bumping into nickel nearby some of their copper deposits, and they've seemed to sort of, unlock what's going on there and, release a whole slew of drill holes, and have got a pretty good sense of, one zone has got a decent higher grade core in it, and the other one is a largely disseminated one, and 16 meters at 1% with almost 4 meters at 3.5%, are some pretty good grades, and they had multiple hits with those multi-percent nickel. So that was very good to see, and it'll see how it evolves, because again, it's basically a whole new district that really hadn't had much work done previously. So that's one to definitely keep an eye on. Another one that we've talked about in the past, and had some pretty good results on their property in Northwest Ontario. They had about a year ago, they drilled one of their targets and hit some multi-percent nickel over some decent widths. They've now drilled another target, which is several kilometers away, and got similar kind of grades on a different lens. So that was good to see. The key thing for Palladium One now is to keep an eye on to see whether they can extend those kinds of grades over any kind of depth width. But it looks like they've got some pretty interesting targets that are there. So it was very good to see. The other sort of one of note was Manitou, another non-nickel company, Manitou Gold, primarily exploring for gold, but basically found some rocks similar to the kind that we've got around Crawford, and at some of our other properties, and had some multi-100 meter intervals at 0.25% nickel. And based on the the mineralogy they did, it looks like most of it has the same kind of hazelwoodite, pentlandite assemblages that we have in our properties in the Timmins region. So again, good to see that there, and we'll see what happens in terms of they're looking at spinning those nickel assets out into a separate business. So all good to see.
Good. So lots going on out there. We're still very much at the point we need all of the above to be able to fulfill the demand side of things. So good news. So it's companies to look at. If you haven't looked at them already, go have a look. That's from the CEO of Canada Nickel Corporation as well. There you go.
Here we are.
I want to talk about this next bit. Which is the Lobo Tigre, right? He put out a report. Why I'm not nickel bull, and that's fine. He writes well. He's a nice guy, but I just wondered what your take on that was, because we know his view, we know his position. We're not quite sure of all of the necessarily. We agree with all of the data as to which allowed him to get to that position, or is he right?
No. I mean, again, I was good to see the analysis and walk through. Thought he did a good job with it. I guess sort of two things. One, again, we've been talking since the very first, episode of this 3 years ago that, the nickel market was always, the battery market was always going to split into low end lithium iron phosphate, some sort of chemistry for the mid market. And then, the nickel NMC batteries were always going to be for the higher end of the market. So there seems to be all of a sudden this shock and surprise that lithium iron phosphate is taking such a big part of the market. And again, it's always factored, into my thinking, it is the appropriate battery technology for smaller vehicles that don't need the range that the bigger batteries produce. The other part too, again, is this the Tsingshan magic technology around making matte, again, not realizing that, the nickel industry had been doing it for 50 years prior to that. So, again, it's not some sort of new explosive piece of supply. Again, something I've been banging on the table about since our very first session, that, the material will be able to find its way, whether it's class 1 or class 2 or laterite or sulfide can end up in either of the end markets it needs to end up. So, that is going to happen. I think the big place where he maybe fell down a little bit was batteries aren't all equal size. And again, there's been a bunch of analysts who've done this as they've shifted their mix around with lithium iron phosphate, and then caught themselves. One of them actually caught themselves and corrected himself publicly, actually, which was rare for them to do. But again, you use nickel for the energy density. And so you tend to use it more for big cars and trucks. And again, given the size of a Ford F-150 pickup truck or some of the big, GMC SUVs, they're not only nickel batteries, but they're really big batteries. So, they're 90 kilowatt and 100, the Ford Explorer, 90 kilowatt and 130 kilowatt batteries versus, 45 or 50 kilowatt batteries that you would see in a small car. So they're not only a lot bigger, the high nickel ones are, will on average end up being a lot bigger than the ones that are being built for LFP. So you can't treat each car and truck as an equal unit because there's a lot more battery going into the bigger vehicles. The one piece is, again, LFP has a huge number of strengths, and he correctly picks up on all of those. And again, I don't, LFP is going to be 50% of the market in the future for sure. It's not an issue today because lithium prices are sky high and through the roof. So the raw material package that you have in a battery can be valuably recycled today. In the future, when you have phosphate, iron, and lithium at more closer to long run prices, it's not really an attractive recycling proposition. And I've had a number of people say that's actually not even economic really at those to do it. And the governments may have to provide, you basically, force the companies to recycle them just to make sure they do get recycled going forward. So, that will have to factor into the overall cost value equation of those batteries going forward, which I don't think people fully appreciate. So again, I just think he's undercounting demand because he hasn't factored in the big vehicles with the big batteries. And the other big one is, yes, lots of nickels coming from Indonesia, have not disputed that at all. But the reality, and again, the deals that were announced this week, North American and European car makers are not going to base the biggest fundamental transformation of their business on getting supply from Chinese controlled supply in Indonesia that has a massive carbon and environmental footprint with it. So if there was not an issue, every major car maker would have already signed deals with Tsingshan 3 years ago, and everybody would be moving on. But that's that has not happened, and I don't expect that to happen other than for near-term supply because there's no other alternative. I don't expect that to happen anytime soon.
Right. Okay. So close but no cigar in this instance. Blake's like, see, what I like about that is what I like about what Lobo did is he laid out and went through a kind of process of saying, let's explore all of the moving parts, all the variables. Yep. And he says, right, and based on that, those assumptions, I'm going to come up with this conclusion. And he gives them a bunch of different alternative, yep. scenarios as well, which I think is smart. I like an intelligent person like that having an intelligent debate and asking the questions. Nothing wrong with that, ever. Nothing to get angry about at all. It's like, which is something we see all too much out there in social media. It's like, well, you disagree with me. That's awful. No, it's okay to disagree and still be friends. Yeah. I always say that phrase. And in this instance, you just pointed out a couple of things in terms of potentially around recycling, incentives. So do governments need to make car manufacturers recycle it or at least, address that issue somehow with the LFP. And then the case of use cases, different battery sizes for different models of vehicles or trucks versus cars. So is there any sort of data which says, based on if LFP is 50% of the market, will be in the future, you're agreeing with that, how the nickel demand is affected? Does it drop off a little bit, or is it, quite frankly, it's still a straight line up? Because the analysts are reassessing all the time.
Yeah, so there's like Row Motion, Benchmark Minerals, Battery Metals Review. Those guys really try and do look at metals usage, sort of either vehicle type by vehicle type, or fleet type by fleet type, to really get a sense of how that is going to shift. And all of them, we've seen EV adoption rates increasing. So 3 years ago, people were kind of talking maybe 30% by 2030, but I think we'll, be, measurably higher than that number by that time. And so, again, Benchmark's report, I think was like 2 months ago or 3 months ago, where they, said we need, X dozen nickel mines that are, this size by 2030. So they see some significant gaps in the market emerging. So, and I would say they do a good job with the work. I would compliment in terms of the what Lobo did is scenario analysis is far better than having a single point forecast, because again, it allows you to see where the leverage is to say, okay, well, I don't quite agree with this point forecast. And when you have a point forecast, then you don't know, okay, well, if I don't believe that number, or I think it's 75% of that number, 125% of that number. But I thought, sort of having the different scenarios, it kind of allows you to triangulate between, okay, my view is between X and Y, and based on that, that's, where I see things going. So, but yep, no, good, well thought out analysis is always good, and always good to debate. So,
yeah, well, debate that's critical, critical thinking, literally. Okay, the other thing I wanted to talk about, so, we thank Lobo, we thank the guys who brought it up in percent on the app. It's good discussion. Hopefully this is a bit more food for thought as well. Maybe people come back with questions. The other thing I think I would like you to kind of join in on is we're running a few series coming up. We've kind of got the Contrarian's Guide to Investing. I think that will be a good one in terms of all companies being pummeled at the moment, and there's some good discounts out there, some fantastic discounts to be had, and therefore bargains to be had, I should say. And the other one is we've got a series called Low Grade is King. Now, you fall heavily into that category. And this is really to point out to people, when you're sort of doing analysis of companies, whether it be you're modeling stuff, if you're sophisticated enough to do that, or if you just want a sense of, can this company work by looking at a few of the basic variables. Grade is always something that's at the top of everyone's list, but it's not necessarily the arbiter of economic success always. So we're going to talk to some low-grade companies in precious metals, battery metals, and elsewhere in the whole sort of metals and minerals space, and just maybe show people examples of where the economics are determined by multiple variables, not just grade. So I think I could be quite educational. If you're up for that, I'd love to invite you along.
Most definitely.
That's the kind of response and enthusiasm I want, Mark. Thank you very much for rattling through the world of nickel for us today. Looking forward to seeing you soon. You're going to be in London as well, potentially, in the next couple of weeks. Hopefully,
in a couple of weeks for LME Week. Yep.
We'll be there, LME Week. Enjoy the rest of your trip. And if you see Dolly, say hello.
I most certainly will.